Hi everyone, Michael Zagari, Portfolio Manager with Wellington Altus Private Wealth. I'm here with you. It is Friday afternoon, about 15 minutes before the market closes, and I have a quick question for you. If a bank or institution is willing to lend you a pile of money, do you think that they would simply just ask one or two questions and then give you millions and billions of dollars to help scale your business? Or do you think that these institutions that have the capital, have the credit facility, do you think that they would do their due diligence and ask the tough questions and grill and look at every inch of a financial balance sheet before they decide to lend money? I ask you this because if we look at the example of CoreWeave, if CoreWeave announcing earnings yesterday, CoreWeave has destroyed earnings year over year, literally doubling earnings growth from last year compared to this year. But the market is selling the stock today. Nothing crazy. It's been down before 12%, but today it's down 12%. So why are investors selling the stock and dropping it down to 12% today? The reason for it is because they didn't like what they heard. They already know that the company is borrowing massive amounts of capital to scale the business. But what they didn't like to hear from the CEO is that earnings expectations for the next quarter may not fit exactly aligned with forecasts. And we're talking about, instead of 2.7 billion, we're talking 2.6 billion. And that was enough to send the stock down. So you have to ask yourself, as an investor who owns CoreWeave, is this a buying opportunity? Am I missing something? Why would institutions line up to try to create some sort of credit facility where they can lend money out to CoreWeave in a preferred manner and be able to help them scale their business? Well, one of the reasons could be that CoreWeave has a $100 billion backlog in orders that need to be processed. That could be one major line item on the risk assessment. But my point here is not to go out and buy CoreWeave. This is not investment advice. My point is like, think about it from a logistics perspective, or think about it as a strategic perspective on when you're rebalancing your portfolio or adding positions to your portfolio. You want to know these points. You don't want to be basing your investment decision simply on the stock price. So if I look at the stock price today, the stock is down 12%. Does that mean that the company is not worth looking at for the next quarter? I don't know about that. So I just wanted to make sure that you take these points into consideration. Have a great weekend, and we'll talk soon.